everything you need to know about an FHA loan, which is amongst the easiest loans to qualify to buy a house with. Number one, FHA is not a loan. FHA insures the loan so that people can buy a home with a small down payment. Number two, you do not need outstanding credit. Believe it or not, in some cases you could buy with an FHA loan with a score as low as 500. Now, most people don't get approved when it's that low, but you can, and it's only 10% down. Now, once you hit a 580 credit score, it's only 3.5% down. All those myths about 20% down, you got to save a ton of money and all these things, they're not true. So if you want to know what to do as far as the down payment, you call me, Chris the Mortgage Pro, and I'm going to show you. Number three, you must have acceptable and provable income. If you work off the books, that money is not acceptable. If you have a job, what we're going to do is we're going to look at pay stubs, we're going to look at W-2s, and sometimes income taxes depending on the situation. If you're self-employed, we are going to look at your income taxes for 2 years. We're going to average the income. That's not the gross. That's how much you pay taxes on that you net after your expenses. And that's your income, and that's how we have to do it. Number four, work history. What do I mean by work history? You need a 2-year work history. And what happens is, if somebody has only been working for 6 months in their whole career, we can't use that, with one exception. If you went to school, maybe you got a degree, you went to college, that time for college will serve in lieu of the work experience. Otherwise, we want a 2-year work history that is provable in the recent times. Number five, down payment. Now, again, I mentioned earlier, 3.5% down payment. If you're 580 or above Fico Score, if you're below 580, it's 10% down. Now, where does that money come from? Well, it could come from your savings. It can come from grandma. If grandma has some money and she's going to help you buy a house, we'd all love to have a grandma like that. And it could come from your 401k. Cannot come from mattress money. It has to be seasoned in the bank and provable wherever that money came from. Now, if it came from grandma, we're going to ask grandma for her bank statement and a gift letter saying that this is a gift, not a loan, and that's totally acceptable. Again, a 401k, sometimes you can borrow the money out from your 401k. If you have $20,000, they'll let you borrow usually half, $10,000. Sometimes they'll let you take the entire $20,000. Now, if you do that, you may have a taxable event, so you talk to your tax professional, but there's a lot of ways to do this. I one time helped a family. There were 8 family members, and here's what they did. One person had saved $5,000. This was a number of years ago. And the other 7 family members gifted $1,000 apiece. And at that time, that was enough money to put for a down payment and the closing costs to make it happen. So there's a lot of ways to make it happen. Reach out to me, and I'll see if we can figure it out together. Number 6, when it comes to credit, there are a couple of situations that we cannot avoid. If you've had a foreclosure or a short sale in the last 3 years, you have to wait until those 3 years have passed. Or if you've had a bankruptcy, you must wait 2 years after that bankruptcy is discharged. So if you filed 2.5 years ago and it's discharged 1 year and 10 months ago, we're going to have to wait 2 more months for that time frame to pass. Number 7, debt ratio. Now, there's 2 pieces I'm going to teach you about a debt ratio. The first part is 47% of your gross income. Let's say you have a job, and I'm just going to make up a number. Family income is $10,000 a month. You can have a payment up to $4,700, 47%, and still qualify for that home loan. Now, there's also something called the back end, and that is when we add in your debts, your car payments, your credit cards, your student loans, maybe alimony or child support. And when we add the house payment to those debts, it can't be over 57%. So you must meet both those guidelines, 47 and 57. If you have 20% on car loans and student loans and other debts, well, then your housing payment's going to max out at 37% because you can't go over the 57 on the back end. It's a very liberal and easy qualification for most people to be able to qualify with an FHA loan. They are amongst the easiest debt ratios to qualify in all of the mortgage industry. Number 8, mortgage insurance premium. With an FHA loan, you will pay mortgage insurance, and what's going to happen is they're going to take your loan amount and they're going to add 1.75% of it. That's an upfront mortgage insurance. It's financed, but this is required by the insurance company, HUD, to insure the loan. Now, you're also going to pay a PMI rate of approximately 0.85%. So that means for every $100,000, you're going to be paying an extra $850 a year. Why do we do this? Well, they have to do this for the insurance so that you don't have to put 20% down. It makes it easy and fair because, hey, you're putting less down and they're covering you just in case. Number 9. We have to calculate your income, obviously. Now, there's different ways that people get paid. If you have a salary and you make $5,000 a month, well, that's easy. If you work hourly, what we're going to do is we're going to say, how many hours do you average for the past 2 years? We're going to get verifications of employment from your company. And if they say, hey, he works 40 hours a week, very simple. You can take the 40 hours times the hourly rate times 52 weeks, divide it by 12, and there's how much you make a month. Now, if you work overtime, that is averaged over 2 years. So sometimes people say to me, hey, Chris, I make $1,000 a month in overtime. And I look in the past 2 years, they've made $2,000, $1,000 for the last 2 months. It's got to be a history in order to use that income. If you're self-employed, we're going to use the average of 2 years profit. If there's depreciation on your taxes, we're going to add that in. There's other things that we could add in to sometimes build it up. So never say, oh, I don't qualify. When you're looking, we're professionals at taking a look at the income taxes. We'll figure it out for you. Number 10. Before you go see a house, super important, you have to be pre-approved. Otherwise, a realtor really doesn't want to go show you houses if he doesn't even know if you are approved or can be approved. So we sit down, we fill out an application, or you could fill it out online. It's very simple to do, it takes 5 minutes. And we go through your documentation. We're going to go through your money. How much money do you have? Is it in the bank? Is it in a 401k? Where's the money? Where's the money coming from? The down payment. We're going to go through your income, your pay stubs, W-2s, income taxes. How much do you make? So we have to go according to the guidelines how we can calculate the income. Commission, as an example, again, is a 2-year average. We can't just say, hey, got a $10,000 check last month, but he's really averaging $800 a month. So we have to do things in a certain way to meet FHA guidelines to get you approved to buy that home. Number 11. Next, you're going to go out with a realtor. You're going to find houses and you're going to say, I don't like that one. Hey, this is the one I want to make an offer on. And your agent is going to recommend the price to you. If it's a $500,000 house, they may say, hey, offer $510. There's 15 offers on this house. Or they may say, offer $490. We might be able to get it cheaper for you. Maybe we could get them to pay some closing costs. Certain markets you can do that, certain markets you can't. All depends. But your agent is the pro. If you don't have an agent, we'll find an agent for you and they'll help you negotiate and communicate and put the pieces together. That's their job. After making the offer, what's going to happen is the seller is going to have a choice to make. Do we accept this price, or are we going to counter with a different price, maybe a higher price or maybe a different condition? And once the two meet, we're in contract, we sign the purchase agreement, and we get started on the whole process. Number 12, once both parties, the buyer, you, and the seller, have reached an agreement on what the price is, we open escrow and we start the whole home loan process. Escrow and title companies, they start working together to make sure all the I's are dotted and the T's are crossed and everything comes together. It can take between 20 and 45 days depending on what state you are. There's a lot of reasons why that happens, but your agent or I can explain that to you. Now, we go through the whole process, and once you're approved, we've had the appraisal, we've had an inspection, we've had everything done, we're going to issue what's called the closing disclosures. And you're going to sign the closing disclosures. Basically, those are the final numbers. And 3 days later, you can sign the final documents. And usually the same day or within a couple of days, we fund the loan and record the loan with the county that you're in. And then, congratulations, you fired your landlord. Hey, I hope you enjoyed this video. I hope you learned something. In the description to this video, what I want you to do is there is a link for a free book. Yes, I wrote the book on how to fire your landlord so you could buy your own house. It's a free digital download, and it'll go through all the steps of all the different loans and all the pitfalls and all kinds of things that you need to know in the home buying process. And of course, you can reach out to me. We'll get an application started and we'll get you pre-approved so that you can go buy that home of your dreams. Let's fire your landlord.